What's going on, guys? Billionaire Michael Saylor says buying a house is a trap because property taxes eat you alive. Every 36 years, he says, you pay the entire cost of your house again. But is that actually true? Let's break it down. Here is what Saylor actually said. He pointed to a 2% property tax rate in Florida and did some quick math. At 2% per year, over 36 years, you pay roughly 72% of your home value in taxes alone. He rounded that up to say you pay the entire cost of the house again. His conclusion? A house is not a very good store of value because you are taking on a massive tax load and a maintenance load on top of it. He thinks you should rent where you live and put your money into a liquid asset instead. And by liquid asset, he means Bitcoin. But here is the problem. Saylor's 2% figure does not match reality. The national average effective property tax rate in the U.S. is 1.1% according to Census Bureau data. And Florida, the state he specifically called out, averages under 1%. The actual highest property tax state in the country is New Jersey at 2.42%. So Saylor is using a number that is double the national average and more than double Florida's real rate. At the actual national average of 1.1%, it would take 91 years, not 36, to pay the full value of your home and property taxes. The math only works if you cherry-pick the worst case. But even if you live in a high-tax state, Saylor is only telling you half the story. He talks about what you pay in taxes but never mentions what you gain in appreciation. Historically, U.S. home prices have appreciated at 3.5 to 4.5% per year according to the Case-Shiller Index. On top of that, when you buy a house with 20% down, your appreciation happens on the full value of the home, not just your down payment. That is leverage. A $500,000 home going up 4% gains $20,000 in equity on a $100,000 investment. Saylor also skips the mortgage interest deduction, the capital gains exclusion when you sell, and the fact that property taxes fund your local schools and infrastructure. Now here is the part you need to understand. Michael Saylor is not a neutral observer. His company, MicroStrategy, now called Strategy, holds 846,000 Bitcoin. That is roughly 4% of all Bitcoin that will ever exist. Every dollar that moves out of real estate and into Bitcoin benefits him directly. He calls Bitcoin digital property and says it has no property tax and no maintenance. That is true. But Bitcoin also has no utility, no income, no tax deductions, and a history of 50% drawdowns. Saylor paid a $40 million fine in 2024 to settle a tax fraud case with the D.C. Attorney General. So when the guy telling you not to buy a house has a massive financial incentive to redirect your money into his preferred asset, you should at least factor that in. So what is the verdict? Saylor is right that property taxes are a real and ongoing cost that many people underestimate. If you live in New Jersey or Illinois paying over 2%, the math is genuinely painful. But his 36-year claim is based on a rate that most Americans do not pay, and he ignores appreciation, leverage, and tax benefits that have made real estate one of the most reliable wealth builders for decades. The honest answer is that it depends. If you are in a low-tax state and you plan to stay long-term, buying still makes sense. If you are in a high-tax state and you move every few years, renting might be better. But do not let a Bitcoin billionaire with 846,000 reasons to redirect your money make that decision for you. If you like this content, please subscribe. And if you have a topic you would like us to cover, drop us a message. This is not financial advice. Do your own research. I will see you in the next one.